Hi, Warriors. How's everyone doing today? Everyone doing okay? Want to welcome our viewers from investing.com. Been kind of a wild week. Down hard Monday, Tuesday, recovering Wednesday, Thursday in the markets. And here's the reason why. Okay, this was trade. So this is your trade war currency. It's a yuan. And still has done really nothing wrong. It's mid-range. Check the breakout. We'll see on some shorter term stuff. We're right into this moving average. I think that's going to be a critical area. Actually, if I traded it, I'd be probing the long side here, wrong under here. This may just be corrective, but this is, if you're rooting for new highs in the stock market, you need a breakdown in this. And if you're a super bull, eventually we should negate the breakout here. I still think that there's a chance that we get this run above the high. This still looks like a continuation formation, but in the markets, you have to be prepared and know where you're wrong, know why you're getting into a trade, where you're wrong. You're wrong if the Y is negated. So the Y here is 695. So you could tighten it up if you're a scalper, but on a position basis, this is really the key number. We take this out, we know that the trade war is lessened, and I just don't think that's going to happen. We break out here, we know it's accelerating, and that tariffs might not just be rolled back, but possibly increase. So really, if you trade anything, you have to pay attention to the yuan. In the meantime, the dollar still remains under pressure. It's done nothing right here on a daily basis. Very negative week starting from last Friday when everyone was away. So the dollar continues lower, even though we've had a recovery in the market. So I wouldn't chase this break here in the dollar. In fact, I'm looking at euro now, and I still think there's a good chance for higher numbers. But I'm starting to see this. I do think we're going to come out of here and trade 112. I'm just starting to see this 1, 2, and maybe a 3. It shows up a little bit better here. So this could be the first drive, the second drive with a third to come. So premature if you're a dollar bull, in my opinion, to start going with it. We really had a, after Friday, this is something that really, this has been one of the more difficult markets to trade. Looked like you had a breakdown here, and then we're at new highs. And then Friday, you had the ambush to the downside, and normally it would mean something, but it didn't mean anything because I thought we would just rally back in fib style. Um, Glad I didn't take a short position yesterday. I guess there were some reports. Perhaps we're headed up towards this major trend line up here around 59.60 or so. Again, this is starting to show a little loss of momentum here. They have all the stops, okay? So this is one potential scenario, is that we took out buy stops here, here, the top of the range. They're gone. So, right here at 58.71, people had buy stops above these two highs, thought they had it. Now they're gone. Okay, so I'm alert for a reversal. I'm starting to get some short-term momentum divergences. To me, this looks like a 2. Okay, we have 1, we have 2, maybe a pullback where the RSI gets cheaper, and then one more push, maybe up to the trend line, and maybe a great shorting opportunity in the crude up there. We break out over 60, something else is happening. And the yen, the recovery hasn't been that great compared to the stock market. I'll get to the S&Ps in a minute. So again, we had a false breakout in the end. If you notice, there's been a lot of false breakouts. That's why I say crude might be setting up to do the same, right? So yen, we did. We're holding this, I believe this is the 50-day. 108.84. They're both really pinched in. The 50-day comes in at 108.52, which has been a very important level, and the 200 is at 108.97, so we're underneath that. Yen still looks vulnerable to me. You had a little pop in yields yesterday. I think that we're going to make new all-time lows in yields, which would be bearish for this pair. Let's see what happens here. 178. They're going to make another run here or not. I still think there's a chance for new low yields. TLT, it's been a rough trade, gapping, area gaps everywhere, but here, much closer to challenging a breakout than the yuan was. And I have to believe that if we break out in TLT over 142, it's going to be accompanied with risk off. So here's the S&Ps. And there's the yen, it's crossing. S&Ps to me, I think can be a failing rally. Here's your daily, here's your 4-hour. I'd start to be concerned if we start getting candles closing over 31.30. But right now, we talked about it yesterday with Steve, and he was saying he can't believe how many times the market's going to buy that, an unidentified source said things are, coming together between China and the U.S. I saw things that China's very upset, not as much about the Hong Kong bill that was passed by Congress and President Trump signed, but there were some photos of what people are calling detention camps in China that hundreds of thousands of people are passing through. The Chinese are saying it's a vocational training, and I don't know, breaking up rocks with a pick is not the kind of vocation I'd want to be retrained for. I really don't think that I would be that productive there anymore at this stage. So China's having their feathers ruffled here, so keep an eye on the yuan. It's my contention in the S&Ps here that if this is a failing rally and we have a quality, which was about 90 handles, just a few days. So 90 handles from here, it's going to take you back down to 30.30, which is what a lot of people are looking for support, calling this kind of like the breakout here at this 30.30 level. Anyway, Blake, I'm going to toss it over to you.
Wait, can you go for one more minute?
Oh, sure. Yeah,
Thanks.
I can.
Thank
I could go for another few hours.
Just a couple more minutes, please.
Or Steve, actually, he's never out of words. But go ahead.
I knew you would say that. I knew you would say that.
No, you know what, bro? I talk as much as you. I like to talk as much as anybody. Anyway, so I don't know what you're thinking, Steve, but this could be just a failing rally. We talked about this yesterday, and I said, well, I hope they keep believing it until we get to 31.20 or 30, and close enough for government work up here. And I would use this moving average as some type of stop loss point if a candle closes back over it looks like it's 31.29, but I'm probing it here. And keep in mind,
yeah,
also,
and the last few days, we've had the market putting a high more or less at the open. So we've had like more bullish price action pre-market open than when the market opens. So we might see the same scenario.
And we have NFP tomorrow, right?
Yeah.
Okay, so that could be the key for the week. Because right now, what do you have? You have a battle between the bears and the bulls and maybe the NFP, which really hasn't been that market moving for quite some time. A weak number might be what would take it down, and a continuation move down in the dollar and flow out of U.S.
An
dollar.
outlier could definitely play a role. There is no question.
You know what they're looking for, bro, for tomorrow?
No, but you can check on our site.
Okay. We have everything on ForexAnalytix.
We have everything. Yes.
So if you really, besides your trading platform, you really do have everything here, you know, not just the research, but you're going to get all the news. We put data flash up here.
I'm back, by the way.
Okay,
So,
you could set up
I'll
your
let you
own.
continue on.
Okay, so you could set up your own Twitter feed, you know, you could have a live stream of this. You could have your own personal Twitter, so you don't even have to go to TweetDeck.
175.
That's what they're looking for? Okay. And really, today's the last day of our cyber week. You should go for it today. And the link, I believe, is in the room.
Today,
Okay.
today and tomorrow. Yeah, we extended it for the duration of the working week. Yeah, it's
Okay.
not going to be up on during the weekend. Yes.
Okay, and that is 2 for 1, 2 months for the cost of one. Give you a chance to get in gear for 2020. Okay, so 2020, a lot of people, cycle guys, are looking at this as being a pretty key year. These even number years, election year. I do expect major moves in the market. You know, December is kind of a quiet period, and then
Not
it's
last
kind of
year.
not last year.
Not
Yeah,
last year.
last year was the worst year since 29 in December. So, you know, people are worried about that. Stuart wants a link. Can we post a link in here so he could sign up? Stuart at bowleradams.com wants to be part of the community.
Just go to forexanalytix.com. I'm going to
Yeah.
write it down, and there you go.
There you go. So you just go to our website.
Pretty easy from there. Yeah.
Yeah. Okay, Blake, how are you, buddy?
I'm good. You know, I'm so irritated. I'll share with you why. Let's go over here.
You're welcome, Stuart. Thank you.
So, you know, the New Zealand yen, actually, it stopped me out last night at 35 when it ran above these highs, or came out last night and said, you know, we're neutral. This is after the bank financial stability report, and it stopped me out. And then soon as he said he was neutral, the RBA, Australian retail sales came in weak. All of a sudden, the New Zealand yen started trading heavy. I reshorted it last night at like the 25 level, put it above these highs because I was like, man, all we did is brush against the channel top. 200-day moving average just punched above it. And I'm like, you know, I think that was it. And so, you know, I'm short again. I'm a little irritated because I got stopped out. But now I'm looking at this, you know, this little head and shoulder pattern that's trying to play out here. But that's my irritation. But somebody was just mentioning about, you know, part of the ForexAnalytix community, and I'm going to share with you guys like an example of analysis that I just did in the chat room, and so you can see this is our chat room here. Give you an example of what I wrote. You know, the euro pound hit the 38% retracement from the late 2015 lows to 2019 highs. Shorter time frame, it looks like it's breaking down. It does, right? Like if you look at the euro pound, you know, look at the euro pound on an hourly or, you know, 4-hour chart, you'd be like, oh man, here we go. We broke through all sorts of support, right? Well, really, longer term, you'll see here is we are at a 38% retracement, right? We're at 38% retracement of the long-term move. Even though it looks like it's breaking down, we're actually, you know, holding up there. So now the reason why I write that is because in the event that we get a false breakdown or a move back above like 84.70, that's going to create a false breakdown. And, you know, with the cable, we're running into a lot of resistance. This is in our private chat room. So I'm just sharing with you guys here, you know, what we're talking about. You'll see there's a long-term trend line in the cable. We're right at that resistance. Also 131.70 is a big confluence of 50% retracement, 161% extension of the consolidation here. And even though I think the cable's going higher, you have to keep in mind that we have we have this election next Thursday, and then we have polls coming out between now and then. So the pound might start to struggle as we are nearing this, resistance. People might say, "Oh, I'm going to take some profits off the table and whatnot." So there's Nitish right there. So I'm going to put you guys back up over here. The reason why I mention all this is because I think if the euro pound, well, first of all, look at the euro. Let's go back over to the euro dollar. Look at the euro. The euro's firmed up. I tried to actually play this thing on the long side yesterday on a break above 111. I took it off the table when, it slumped back down there. I'm like, I don't want the exposure. And I took it off for basically break even. But that doesn't mean that the euro, and you'll notice this dotted trend line here, the euro is pushing a really key long-term trend line, and that's what it was pushing yesterday. So I think if we get a foothold above 111, that could be potentially bullish for the pair. Now, the question I have here is if the pound gets a little bit of profit taking, the cable gets a little bit of profit taking right here, as we're very overbought. I mean, look at the 4-hour chart, look at the RSI, we're pretty overbought. We might be able to extend a little bit higher, but I think you might see some profit taking at least ahead of the election. Like I said, I want to be long. I think that if the cable can drop back down to here, that'd be great. That'd be preferable for me to be long on some sort of pullback like that. But if we get a little bit of pullback here and the euro stays firm, or maybe even tries to break out above these highs, that's where the euro pound comes into play. That's when the euro pound you could see a little bit of a squeeze. So I'm watching the euro pound really, excuse me, didn't mean to yawn on you guys, but I'm tired. 4 o'clock in the morning comes around pretty early around here. But I think if you watch the euro pound, it's pretty oversold, especially on here's a 4-hour. We're pretty oversold. So could we get a bounce back? Sure. Will the euro pound go back up to 90? Yeah, doubtful. I mean, obviously the Bojo would be losing next Thursday if that was the case, which could actually happen. But if the polls start to tighten up and you get a little bit of profit taking in some of these pound longs, I think that we could trade back above 85 pence, maybe back up towards this is going to be probably key resistance for the euro sterling right here. The euro pound will be somewhere around 85.50. So what I probably rather do is do this. If you really think that the Brexit deal is going to happen and Boris Johnson's going to win the election and have a majority, no hung parliament, then you want to short the euro pound. But doing it down here is a little dangerous. Like I said, it might be due for a bit of a squeeze in the cable. So that's why I'm bringing it to your attention. And then, like I said, the longer term 38% retracement is right here. So, just some food for thought as we move into today. So, one of the other things I want to note, I want you guys to pay attention to, and I'm sure I'll get some comments from Steve and probably Stelios around here. You have this S&P. And we have this inverted head and shoulder pattern. A lot of people are going to go, oh, inverted head and shoulder pattern. But that's a really big head. That's cone head looking type of.
It looks like Steve, doesn't it?
Yeah, it looks like a little Beaker, little Steve. Just kidding, Steve. No, but it's. When the head's really elongated like that, I tend to dismiss it. But what's more important is we're at the 618 retracement. So I sent this out earlier. I mean, when the S&P was at 11, 31, 20 something, that this is going to be very pivotal. hold on, I'm sorry. I was just listening to the squawk here. But anyway, this is going to be kind of pivotal for the market right at these levels. Okay, so I think you have to watch the S&P here. I think a lot of people are going to be trying to play into this, into this bullishness from the reversal from a couple of days ago. The problem that I have with it mostly is that that the 618 is right here, and it's it's knocking its head right up against resistance. So just be a little careful with the S&P at these levels. Okay. All right. So yeah, how you doing, guys?
I'm very well. How are you?
Good. Just
Yeah.
what's happening? Speak to me about the UK elections going
Yes,
on this
it's the
Thursday.
first thing. It's the first thing I want
Finally.
to talk about. Yeah. Basically, if you look at our site and my analysis for euro sterling, I finally went back to neutral. If you look at the chart, actually, euro sterling was the one, the interesting one. If you look at my chart, it's something I drew months ago, and this is what I thought would happen. I had two scenarios, and it happened much faster than I thought. Now, the thing is, in my opinion, there are two scenarios where the pound is going to suffer. One, if Jeremy Corbyn gets elected, and why is that? Because we know socialist governments and leftist politicians, they spend money, and they spend money like there's no tomorrow, and the pound, the currency of the country always gets devalued. That scenario seems to be going further and further away now, because the polls are not closing anymore, and we're only 7 days away, or what is it, from the election.
Yeah.
So that is going away. So that's good for the pound, and I think that's one of the reasons why we're getting this squeeze, because there is no immediate reason for the pound to sell. So people are getting squeezed out. The second reason why I think the pound could suffer is if we get Boris Johnson as a prime minister, which I think is going to happen, and we get some kind of a no-deal Brexit, some kind of which is a very, very bad scenario for the pound, obviously.
Well, we would get a deal Brexit, right? If Boris Johnson's
yes,
yeah, because
yes,
okay,
but there's
I thought
always
I
a
heard
scenario
opposite. I'm sorry.
No. But I said, if we get a no-deal Brexit, that's when I think the pound is going to drop. But like you said, Boris Johnson, he brought in a deal before the elections. It was accepted by the MPs. The timing was not accepted anyway. That's what he's pushing. So theoretically, a no-deal Brexit scenario should be far away now. So it should not happen. But that's the other scenario that I think, if it happens, then obviously it's bad for the pound. So the bottom line is, those two pound negative scenarios are moving further and further away. And I think that's one of the main reasons why the pound is doing well. Like you said, it's gone quite fast, quite far, the pound, and there's still some uncertainty regarding the election. So there might be a little, relief sell-off, let's say, a relief rally in the euro pound ahead of the elections. But I think things are looking pretty pretty good for the UK in terms of how Brexit is going to be handled.
Yeah, and ultimately, for me personally, if I could just imagine this being the next 4 or 5 days, I would prefer to be long the cable. I'd prefer to be long the cable down in this neck of the woods, somewhere down here. I'm hoping that we do get a pullback, and it'll look very technical, and very, it fulfill what I'd want to see technically if we saw a pullback towards the 30.50 to 30.20 level, and be long going into this election. And then, obviously the election results will, dictate whether or not I hold a long sterling or cable position, ultimately. But I think that's the way I want to play it right now. And I'm hoping we get the opportunity for a pound's pullback. But if that's the case, then, again, I'm looking at the euro pound as being, at very, very critical support here. I think a lot of people are, I think a lot of people are bearish the euro pound, which, like I said, near term, it looks like it's a, big double top. And a lot of people probably got kind of short down here. or maybe even liquidated their longs. And I think it's going to be a little volatile down at these prices. So just my initial thoughts there. But hey guys, I'm gonna pass it over to Steve and Stelios. And but before I do, make sure you take advantage of our cyber offer. This is the last day it will be available. So buy 1 month, get 1 month free. Go ahead and take advantage of it. This way you can have. And when you do, make sure you download the mobile app. So this way you have all of our analysis right on your phone and your mobile device. But I'm going to pass it over to you, gentlemen. And
speaking of which, new versions of the tablet and mobile phone app are coming up within the next few days.
Oops. Okay, that's great. That's awesome. All right. Well, thanks, Steve, and thanks, Stelios, and thanks everybody for being here. And I'll look forward to seeing you guys tomorrow morning.
Thank you, Blake.
Thanks.
Have a good rest of the day, mate.
Have
a nice trading day.
So to continue and finish off with the UK, I think Blake showed the was it the 4-hour RSI, which is overbought. That's true. But if you look at the grand scheme of things, positioning sentiment is still bearish, and this ship has only started turning, right? So if there is good news in the UK, I think the squeeze is going to keep going for a bit longer, I think. So this is something we've been talking about in the chat room for a while, and I think, like I said before, if there is positive news first on the elections, then on Brexit, then this move will continue. I'm convinced of that. Okay, enough of UK and Brexit. Hopefully, there will be weeks when we don't talk about Brexit anymore. Not yet. So what else?
I think that, unfortunately, that those days are going to come earlier than the alternate saga, the US-China. Yeah. So I think we're going to get rid of the Brexit cancer earlier than the US-China trade deal cancer.
It's amazing, though. Yesterday, a Bloomberg article with no substantiated sources or anything talking about the closer on the deal, and stock just turned around and rallied. It's crazy, but it happens. I guess it's because most of the markets are driven by algos now, right? They read headlines.
The fun part is that initially the market started pricing in a US-China deal, and it kept climbing due to that. The sell-offs when the news were bad were minimum. And when the news were good, the acceleration higher was like, nonstop. Then, in essence, we got the fact that there's not going to be a US-China deal because they broke it down to pieces, with phase one being literally just symbolical and no substance. And even though we're now just looking forward to perhaps getting a phase one symbolical deal, that hasn't troubled the market at all, and it still keeps rallying on a hopes of a phase one deal. By the way, in 1.5 minutes exactly, I'm going to bring up the data flash.
We have some Canadian
data. We have initial jobless claims to 215 forecasted. Previous was 213. We have US trade balance, which is expected to improve substantially from minus 52.5 to minus 48.7. Continued jobless claims, and we also have Canadian trade balance in exactly 1 minute.
Yes. Okay. Well, the other thing we had today was data-wise, we had Australia retail sales a little bit worse than expected, but it's not really going to move the needle that much at the moment. And also some, European data has been hit and miss lately. So we had a couple of good PMIs yesterday. Today was the opposite. German factory orders, big miss. And also Euro retail sales, again, a big miss, and also low revision. So it's been very hit and miss, and nowhere near saying that the Eurozone economic data or the US is stable or good. There's leading indicators in particular. They're turning lower. They have turned lower.
Yeah, but as we've said, they're going to throw everything at it to keep things under control for another year. Now, will they succeed? I think they're going to need a lot of luck. Let's see, a few seconds just for the data to come up. Let's see, any second now.
They're going to need a lot of luck in QE.
That we already have. Okay. That we already have. There we go.
They're pretty good numbers, actually.
Data, initial
nothing to
jobless
stand out, but
claims, yeah, yeah, data a little bit better than expected everywhere.
Yeah.
So better data, but do I think it's actually going to move something substantially? I seriously doubt it. Speaking of which, Stelio, one of the most impressive moves that we had yesterday, in tandem with the move we had in crude, was this. Sorry, that was my cat trying to pull my microphone. Was this actually breakdown from the USD CAD? I mean, we've been talking about this congestion area here, and that 133.50 is like super important as resistance, and USD CAD literally collapsed through that. So once again, that opens up the bottom of the range. Now, there are a lot of rumors that are currently supporting crude. I had to actually redraw this ascending channel. We have a lot of rumors, Stelio. I don't know if I don't think you mentioned it, about a possible production cut from OPEC of like 500.
Yeah, I didn't mention it, but it's just talk at the moment. It's not, it's rumors.
It's just talk, but I think it is helping this market, remain supported. Now, the big picture hasn't really changed here. The big picture is that this is one big consolidation within this triangle, and more specifically, we've been appreciating in a very choppy and slow pattern within this triangle, within this ascending channel. So
wearing both the bulls and the bears out, huh, Steve?
Yeah, exactly.
I mean, there've been false breakdowns and then false breakouts, and
indeed. But the two key levels remain to be the two areas of the trend lines. This one as resistance, which currently
60.
passes from 61.50, and this one as support, which currently passes from 51. So 51 and 61.50. Yeah. Anything in between is noise, although I do have to stress out here that we also have this 54.50 area, which if we do break below, first of all, we will have broken through this ascending channel. Second of all, we will have posted a lower low even within this channel. So I still do think that a break below 54.50 should bring us down to that 51 area. So 54.50 does remain an important area of support within this larger triangle. Now, in this case, the correlation, which is not that strong as it used to be between USD CAD and crude, seems to have worked nicely, because you can see this here in this move here in the Canadian. Now the USD NOK responded a lot less. There is still a possibility of head and shoulders formation here, but it has to happen very soon, because symmetry is starting, to get weird. So, this can just end up being a horizontal consolidation before moving higher. The key remains this 907 area. So basically, maintaining a bullish bias as long as we trade above 907 makes sense, because you're definitely in the direction of the trend. But a breakdown from 907, I think will more or less inevitably bring us down to 892 and see what happens from there. So USD NOX volatility has really diminished. It hasn't been doing much, oppositely from what we saw from the USD CAD, which today is showing follow through to a huge down day that we had yesterday. Now, other things that had changed since yesterday, I know that Blake focused on the Kiwi, and I'm also going to mention the Kiwi, but I'm going to start from the Aussie Kiwi. And the reason I want to do that is because yesterday's spike higher in the Kiwi also created this spike lower to test this ascending channel's support, and we're currently pulling back. So I wouldn't find it unlikely if this proves to be a last push lower before some type of a recovery move from here. That was my initial target once we were breaking through 1061. So now we've actually tagged that. So I wouldn't be surprised to see a reaction from there. Okay, bottom line, I think that it's probably a dangerous proposition trying to short the Aussie Kiwi being stretched as it is and on this trend line support currently. Now, Blake did mention the Kiwi Yen. I do agree. I had since a long time ago this ascending channel on Kiwi Yen. I like the fact that we spiked above it and we got rejected both the day before yesterday and today, early today, I mean late night European hours, from the 200 daily moving average. So from a risk reward perspective, it does look appealing to see some type of a pullback here. And the same applies here with the Kiwi. The Kiwi spiked to the 61.8, but the channel it has been producing so far, this daily channel, is threatening with a key reversal and definitely a rejection from the 200 daily moving average, because we did manage to trade above it, but it looks like there is a good possibility that we're not going to manage to close above it. Okay, now, does that mean that we're not going to achieve the inverted head and shoulders formation target at 66, 65, whatever that is? No, it doesn't mean that, but it does certainly mean that we might see a pullback or even a retest of this inverted head and shoulders formation neckline. I think I mentioned that yesterday as well, before we can see, before we see more upside. So I do think that it's going to be interesting to monitor what happens with the Kiwi pairs at the close of the day, because so far we've had this type of price action, but we still have plenty of hours left. And speaking of the Kiwi pairs, it's not a bad idea to also have a look at of how that affected the Euro Kiwi and the Pound Kiwi. So let's go there. So here's the Euro Kiwi, and guess what? That spike lower in the Euro Kiwi also coincidentally, and you can put that in. Aliki, stop this. Give me a second because I have a naughty girl on me. Okay. So, coincidentally or not, this spike lower, exactly as it happened with the Aussie Kiwi, brought Euro Kiwi exactly at this symmetrical triangle support. And as you see, we've had a very, very nice reaction from there. So perhaps this was also some type of a, last move lower before some type of a recovery. And by recovery, I was looking at the test of that move. If we broke through 171.30, we drew that some time ago. Now that this has happened, I can tell you that we can easily at least come back and retest that 71.30, 71.50 area as resistance, right? Keep in mind that we do remain in this triangle, right? So nice potential reversal here as well. So worth mentioning that. And having to do with the Pound Kiwi, where is it? There it is. Having to do with the Pound Kiwi, look at it, currently testing resistance. And as we've mentioned some days ago, let me redraw this a little bit better. There it is. And as we've said many days earlier, this type of price action in the Pound Kiwi doesn't look bearish in any kind of way, right? I mean, it's textbook correction so far, at least what we have seen, right? I mean, it has taken a lot of time to retrace a very small portion of the move that preceded it higher, and the price action is definitely overlapping and very choppy. So I do think that, especially if this was a short-term capitulation in from the Kiwi bears yesterday night with that jump higher in the Kiwi, that we can actually end up breaching through this resistance in the pound Kiwi, and this leading to another move to the upside. So in essence, I think that yesterday's initial spike higher and then a retracement in the Kiwi did produce some interesting developments almost across the board in the vast majority of the Kiwi pairs, as you see, by either testing or forming interesting patterns. So that's why I wanted to start by having a look at the Kiwi. Kiwi Yen, in my opinion, go to minutes before turn down, but of course, small retraces can appear. So let me see what you're saying here. You're saying that the Kiwi Yen can go to 71.76. Yes, it can. I mean, it's very, very close. There's no question about it, right? The 78.6. It can, of course it can. But keep in mind, as I said, this is a nice confluence of resistances here, the 200 daily moving average and this ascending channel. So far, we haven't seen like a big rejection, but definitely I wouldn't be buying the Kiwi Yen up here, right? I mean, it makes no sense to buy it exactly on top of these resistances. Now, can it end up moving higher? Sure it can, and it can even end up moving a lot higher. But I would feel, I mean, if I wanted to be a buyer, I would feel a lot more comfortable in doing it after seeing a retracement to, let's say, that previous range, right? Something like that, and not a bear. Okay. Let me go back to the beginning. USD Yen is going down. What do you think about Euro Yen? First of all, USD Yen is not going down. Let me be very clear what I mean. As I said yesterday, it got rejected from a perfect area. This potential inverted head and shoulders formation neckline got us rejected, and we got a very nice key reversal candlestick. And one day of follow through. But what remains the fact here is the following, that USD Yen has remained since 11th of October trapped in a rather tight range, 107.80 to 109.50 roughly. So before I can say USD Yen is going lower, I definitely want to see a daily close below 107.80. Okay, as long as that's not the case, I'm treating this as something that has no trend at the moment. So I'm absolutely neutral. We're exactly in the middle of this little range, like what is it, 170, 190 pips, something like that of a range. So before I can declare confidence in the bearish case scenario, I want to see 107.80 being taken out, and preferably closing below it on a daily candle. Okay. Until then, I would refrain from having some type of a bias here. What do I think about the Euro Yen? Now, let's pull that up and have a look together. So, what I think about the Euro Yen is that it's still recovering, as you see here, within an ascending channel. Now, is this price action bullish? I mean, in the short term it is, but is it really bullish? No, it isn't, right? I mean, we've seen a recovery which is, rather slow. It has corrective characteristics so far, but it might run higher, right? So one target I have in mind here is like 122.60. So I do think it can make it higher, yes, towards 122.60. And I do think that in the short term, and as long as we hold within this ascending channel, we might keep, drifting higher. Now, if we see some type of an acceleration and this move going more vertical, then we can reassess and perhaps we have had something different in our hands, just perhaps a reversal that started out with accumulation and then accelerated. But so far, as I said, short term you have every reason to be bullish, but medium term to long term, I still don't see bullish characteristics here. I see corrective characteristics in the euro yen. Can someone send me the link? Oh, yeah, we did send you the link. Our pleasure. CAT being rumored at OPEC. Oh, yeah, I mentioned that, Gautam. Thank you. Yes, indeed, it is being rumored. No deal Brexit still possible at end of 2020. From here, cable would likely fall in case of majority. BJ deal is still a big hit to the economy. BOE is likely to cut. SPD lists massive spending demands to stay in coalition. Boons Treasury is moving on this. Yes, but so far, election possibilities so that, there is a good chance that we're not going to have a disorderly Brexit, okay? And this, for the time being, seems to be the more prevalent scenario. Tico says, pound CAD head and shoulders 1 hour and daily pin bar candle at trend line resistance. Okay, first of all, let's have a look at it on the daily. I very rarely look time frames like 1 hour chart. I'll go up to the 4 hour chart, but I have no problem doing that. If you want to, let's first find pound CAD. Okay, here's the pound CAD. So now I wouldn't disagree with the bearish bias because look what I have drawn on the daily here in the pound CAD. So as you see, you have multiple reasons here to be very skeptical about more upside potential in the pound CAD. One of them is this obvious ascending channel. By the way, what I haven't done, and it's not a bad idea to see if there is some type of a confluence, is also draw some fib here and see if there is some kind of, oh yeah, there is a 78.6 as well there. So nice confluence of resistances, right? 78.6 from the highs, ascending channel, and if you look lower, even the possibility of this last part being a wedge, right? So yesterday's daily candle, indeed a pin bar, and a shooting star, albeit white in color. But given the position, because you always have to take candlesticks. I mean, trading based on candlesticks in isolation is really stupid. I can tell you, despite believing in the strength and the meaning of candlesticks, I can tell you that if you trade candlesticks in isolation, it makes no sense. But it is an important indicator when you have, for example, a confluence of resistances, and then on top of them you get some nice type of a candlestick, right? So yes, this candlestick was quite a bearish one. Today so far, we seem to be producing another indecision candle, an inside pin bar to yesterday's pin bar. So I can believe you that there is also a potential, like, let's go down to a 1 hour chart since you want to. Yeah, this looks like a 1 hour head and shoulders formation as well. Yep, absolutely. I would agree with you. So for all those reasons, I do agree with you that there is an interesting potential trade here, and the risk reward is definitely in your favor. I mean, we're currently at 173 roughly. Yesterday's high was at 174. So let's say you're risking 100 pips. Even if we come back down to this congestion zone, that's like 120, 130 pips of downside. So a little bit better than 1-to-1 risk reward. And if we break through that, then we can potentially be talking about a lot more downside. So you can start with a 1 point something to 1 risk reward, and that can actually end up becoming a lot more, because then if you take the ascending wedges scenario, which would imply a retracement back to 167.30, then you're talking about another, let's say, 400 pips of downside, right? So yeah, I like it. I mean, good eye. I had a look at this channel the day before yesterday again, but to be honest, if you didn't mention it, I would probably forget to look at it again, because it's not one of the pairs that I look like several times per day. I might look at it like 2 times per week, 3 times per week, something like that. Oil gap higher on.
Hire that guy.
No, but something. I can tell him one thing.
I think he's in our chat room.
Yeah, this is the power of the community, and this is the power of being in our chat room.
You only have 2 eyes, Steve. Yeah.
Exactly. You only have 2 eyes and several things you have to do within the day, and very frequently you might end up. It's not the same taking a trade because somebody pointed out that there is an interesting opportunity. I suggest against taking a trade because somebody takes it, right? If you're an experienced trader, you never do that. But there is nothing wrong with evaluating an idea, and if it meets your criteria, then going along with it, right?
So you're going to give half the profits on this trade to Sean. It was Sean's idea, right?
Tico.
Oh, Tico.
Yeah, Tico.
Tico, do you go all the way back to FX Street? Because I remember it, Tico. Yeah, okay. Yeah, Tico's good.
What's your thoughts about platinum? Yeah, okay. Not a bad idea to have a look at the metals. What are my thoughts about platinum? So, nothing has changed having to do with platinum. And when I say nothing has changed, the big trend line to watch here is this one. We've mentioned it multiple times. This trend line dates back to the high in August 2011. We've actually had a false break for a single day above it, and then we had like another false break above it, but you can see its importance. I do think that eventually, as everything tangible, platinum is going to have like a major bull market beginning, and perhaps this pattern here is accumulation, right? But we're currently trapped between 875, which is an important horizontal support area, and that trend line resistance. So anything in between, in my opinion, is just noise.
Can you do like a gold platinum chart? Because most of my career, platinum always traded at a premium to gold.
I can do even something, yeah, but that changed some years ago, as you very well know, coach. And here it is. And look at this.
Okay, yeah.
You remember we had talked about it. Look at this. Gold, this is an excellent trade in my opinion, because this is the example that I've used many times. This is the type of an ascending wedge that is definitively terminal due to its inclination, right?
Mm-hmm.
So especially when you see something like that, some type of an ascending wedge like that, and then you see an acceleration to an even steeper one, just look at that move lower, right?
Yeah.
So I do think that the gold platinum ratio is a good trade here, because I think there is a good possibility that this is some type of a consolidation before at least one more leg lower. So that's not a bad proposition.
Okay, thank you for the look.
To see at least a retracement, I would eventually look for at least a retracement back to these levels there.
Yeah, our guest today, Michelle Schneider, was a floor trader on Comex, so she remembers platinum being at a premium to gold for, I don't know when it changed. When did it change? When was it turn?
Now, even more importantly, not more importantly,
what,
but
palladium?
Look at this. this is palladium to platinum. Look how parabolic this has become, right?
Yeah.
I mean, I was expecting back then that this would fail to the downside, and instead of that, I mean, this move literally became vertical at some point. And now, once again, as you see, once again, against all odds,
yeah,
we're getting a throw over from this channel. I mean, but look at this prolonged RSI divergence, right? Look at this.
yeah.
This is not going to be sustained for much, much longer.
Some interesting looks on the metals. So
yeah.
that's what I mean. You could be, it's almost like currency, Steve. I mean, you could be a precious metal bull, and you still have to diagnose which metal is going to do what when, instead of just saying, well, I like all the metals, right? And just like saying, well, I'm bearish the dollar, so it means that you like anything but the dollar. You still have to diagnose where the leadership is.
Where the better opportunity is.
Yeah.
Because why? I mean, I'm very confident that anything tangible is going to move higher against the dollar at some point in the not so distant future. There's no question about it. But I mean, some of them are going to move less. Some of them are going to be more. Don't you want to be in those that are going to move more? Obviously you do, right?
Yeah.
There's no question about it. Somebody's asking my opinion about the Kiwi. Probably you came in later. You can see that in the Ayaz. You can see that in the recording. I went through every single Kiwi pair, actually, more or less. Pound CAD weekly chart will show you better downtrend. Yes, I agree with you, indeed. Look at oil. Yeah, we already had, Sophia, we already had a look at crude. And there's a question which we haven't covered, and we can finish with that so you can start your interview. And the question was, what's the case here with CAD Yen? And as I said some time ago, we drew that like several days ago. I think that the CAD Yen is looking decently bullish from here because we had this triangle. It broke to the upside, and after pushing higher for several days and finding resistance in this area, we started moving lower, but the fashion in which we moved lower definitely seems corrective to me, and we are currently attempting to break above this formation. So I think that CAD Yen doesn't look that shabby, right? I mean, I think there are better opportunities out there, to be perfectly honest. So would I currently be trading that instead of other things? Nah, probably not. But in my opinion, favoring the upside from here makes a lot more sense than anything else. Dale, my message for you from Gautam: weekly claims employment, part of services ISM, USMCA, spike higher in oil, Brexit resolution, US China positive noises suggest that your alternative scenario of US 10-year at 2 to 10% likely. What do you think? That was a question for you, Dale.
210 on the 10-year?
That alternatively.
Yeah, it's possible.
Let me put it here. There it is.
Yeah. Because you never took out that high. It looks like it might be going there.
Yeah, while within this channel,
yeah,
it's not unlikely to do something like that. I mean, we can. Yeah, we can.
Which would be bearish gold and constructive US dollar yen.
In the short term. And you know something? A possibility like that, since you mentioned it, would bode well
for the
with
S&Ps.
Silver, because I still look at this price action in silver, and it tells me probably it wants to take out 1665.
Yeah, it would be negative for silver.
Yeah, and this price action tells me that silver might not be done moving to the downside. It might need to move towards 16. And gold has also the potential. If you remember, I mentioned several days ago the importance of 1480, 1485. So why not? We might get rejected from there once again. See gold also move lower initially, and then make that move, right?
Yeah.
So yeah, that could play out.
Yeah, yields are everything right now.
Indeed. And I do think, if you want my opinion, Dale, I think that one of the biggest themes of the next decade that's going to blow up people like few times it has happened in the past is
A spike in rates.
yes, is going to be the end of the
Bull market in bonds.
multi-decade bull market in bonds. Yes.
I'm
Yes.
with you. One more wave.
Yes. So I do believe that during the next decade, we're going to see that. We're going to
Okay.
see markets starting caring about what they should be caring about, and central banks losing control of
Yeah, maybe
rates.
we're seeing the beginning of that in the overnight Fed funds market.
Yeah, might be the canary in the coal mine.
Yeah. Tweety Bird. Anyone remember Tweety Bird? Huh?
I thought I saw a pussycat.
Yeah, okay, you know it. All right. Thanks, Steve.
Thanks, Coach.
All right. Hi, Mish. I'm going to get you all set up here so we could see what your dysfunctional market family is doing. You're now unmuted. Welcome back, Michelle Schneider.
Hi, how are you?
Good. How are you, Michelle?
I'm great. Should we, let me get my screens going
Yeah,
here. Okay,
that's right. Yeah.
hold on. Share. So I'm going to bring this over here.
Do you ever long for the days on the COMEX floor? No, you don't. Okay, you don't.
No,
have
well, I do and I don't. I do and I don't. You know, it's you know, being at this point in my life.
Yeah, that's true.
Right now, so
I would need a lounge chair in the pit.
Yes,
yeah.
yeah, exactly. So now, can you see my screen?
Not yet. You have to hit the share
Ooh,
button there, the green box.
what the heck happened to my little?
And then it will ask you which screen or which window you want to share. So you have to make a selection following that.
Wait a minute though. All of a sudden I lost the whole darn page.
Well, yeah, because you have to hover your mouse around the menu for it to.
No, but I can't even find how I'm with you on Zoom. I don't even see the Zoom thing down here on my thing. That's weird. I hear you perfectly.
Right.
Yeah, so that means that you're still here with us. Sometimes when you minimize it, Zoom becomes like a little small window at the top right of the screen. Just look for it there.
I see it. Okay, I got it. All right, so now, yes, I do. So if I click on that, can you see it?
Sure.
First of all, you have to mark. Yeah, there you go. Something's coming up.
Okay, great.
Got you, Michelle.
Excellent.
Okay, so here we are wrapping up 2019. Go ahead, Michelle. You know, I really don't even have to ask you many questions. I know you have, you know, a very holistic approach to putting all the pieces of the puzzle together. What are you seeing?
Well, I heard you, it was interesting because I listened to the last 5 minutes of you and Steve talking, and so I heard a little bit about your viewpoints on the metals and also on the bonds. And it sort of fits into something that I've been looking at going forward, which is that with the global zero interest rates and the United States still relatively dovish and having low rates, although being higher than anyone else, the situation, for the Fed wanting to raise inflation, number one. And then on top of that, you have the dollar, which I had written a blog on November 14th saying that that was the top of the dollar. And so far, that turns out to be the case. And so if the dollar continues to climb, we're already starting to see some impacts of the possibility of slowing growth, even though the market is back up again today over the last couple of days. But we have seen some stats that way, and the possibility of inflation starting to peek its little head. So initially, I don't see any major changes to monetary policy, but at some point, they may have no choice but to tighten a little bit and raise those rates. But I don't think we're anywhere near that at that level right now. So we can look way out, but it's irrelevant to what's going on right now. And what's going on right now, besides a tremendous amount of market manipulation, needless to say, is that that's exactly what it is. I mean, we have certain things that are given. We have as we just said, low rates. We have a weakening dollar. Number two, we have corporations who pay no taxes, who can borrow money for basically zero, who have been buying back their own stocks. Those are all the givens. We have global concerns, Germany, Mexico. We have trade issues with lots of rumors. And that's I think the X factor that really moves the market around and can get very frustrating to both the bulls and the bears. So if we look at the charts and try to get rid of all the noise and see what's going on here, if we just take a look at the S&P, nothing has changed in terms of phases. And so if we really want to step back, when I say phases, I mean if we look at the daily chart here, you can see the 50-day moving average still very strongly sloping up, which means that basically the SPY could go down to 303. 303.20 and still be, that would be a very healthy correction, and it would still maintain the phase. That's why I was almost a little disappointed that we stopped yesterday and 2 days ago, and then turned back around. Now you can see that the 10-day moving average here turned out to be a little bit of resistance, and now pre-market we're gapping above it. So that probably means that unless we start to see some negative tweet come out about China or the United States or more tariffs, et cetera, the market is still happy. I mean, it's just really happy. So let's take a look at IWM.
I think we could go to that 30-30 level. That's where a lot of people consider the market breaking out. So you have confluence between a breakout and your moving average there. So
and I think that IWM wants to see its all-time high for several reasons. Number one is yesterday, it did clear the 10-day moving average while the other three indices did not. It closed above it. Number two, you can see this channel breakout that went back for the whole year. And all we've done is test it, and we didn't even get quite down to it this week, right? So that's number two.
What's the all-time high? 72?
Yeah, 172 and change, I think. Yeah, 170, actually 173.39 to be exact.
Okay.
So,
and does this mean that the rally is broadening, that the small caps are starting to hold up better on declines and outperform on up days?
Well, yes, we started to see that in the last couple of weeks. But remember, I think the last time we spoke, I said that until we see the participation of my economic modern family in this rally, that it was suspect. And now in the last week, we've been starting to see the participation. However, let's have perspective on that participation where SPY and Qs and diamonds made new highs. This, we're trying to say, participates to getting back to its old all-time high.
Right.
So then if you look at up here in the monthly chart, you have a Bollinger Band, and that sits right around where the old all-time high is. So I think at this point, unless we start to see, and we're going to look at what I think would be an interesting indication, fail, we'll take a look at that in a moment, then I don't see any reason, like I said, except for the fact that we're always one headline away from disaster, for this not to move up. And of course, we know the administration wants the market to stay up because that's the one solid they have that they can tell people is the stock market is on all new highs. So let's go to the weekly chart.
Except on down days, and then President Trump says, "Oh, I don't watch the stock market."
Yeah, well, that's not.
That's what he said.
I know that's what he said, but
all right, I'm just being a reporter.
Yeah, well, he says a lot of things, and that's
Yeah.
that's one of the reasons why the market is so incredibly
The
versatile.
market is vermished. Oh, that's your name. Oh, okay, go ahead.
Famished. All right, so here, this is, to me, this is the whole picture, right?
This is your the dysfunctional family. It's
So
functional.
we just looked at the weekly on IWM, the Russell 2000. So here it is again,
Yeah.
in pretty good shape. You know, that channel I showed you, we broke
Yeah.
out of, we're still there. If we come back into the channel, which would be really basically a break, let's say at around 157.50 in IWM, trouble, at least more correction. If it holds up here, like I said, it looks like it wants to at least prove that it can go to its old high. If we move over here, this is the regional banks, very interest rate sensitive with the regional banks. But this too has managed to hold up over the moving averages. And by the way, we're looking weekly charts. And once this thing can get through its 2019 highs, which is right around here, up around 57.50, then that might be the indicator that Steve was talking about, that the rates are actually starting to rise a little bit.
Well, do they have to rise or just steepen?
Oh, you just got very muted.
Oh,
Dale.
do they have to rise or do they have to? Can they steepen without much of a rise in interest rates, like
Yes,
the 30?
either way, but I
yeah.
still all of a sudden can't hear you very well, and I
How
don't
about
know
now?
why.
Huh?
No, it just sounded like you went underwater.
Oh, how about now?
No, same. You were so clear like before 2 seconds ago.
Okay, well, just go ahead with your presentation then.
Okay, so now this is another big key right here. Of course, we always talk about the transportation sector. And this too has been holding up, but it can't seem to get through. This is a 200 level right here. We get through 200, then there is nothing that's going to stop this market, or at least IWM, from trying to get up to that 173 level. If we fail under 190, obviously we have the 50-week moving average, then we start to be more cautious. And I'm saying this all giving levels, but right now the picture is still very bullish all around. This was the big concern, and I've been writing about this for the last couple of weeks. Has semiconductors topped out? And so let me go to the daily chart on this because it's so interesting, and then we can get it back down to the weekly chart. Hold on. Time frame, daily, here we go. I put this ellipse here because this is the breakaway gap we had early November. It held this whole time, and then the gap that we had down 2 days ago left that possibility of an island top, which got negated yesterday, or at least I shouldn't say negated. It got put on pause yesterday because of the fact that we got back up into that range. And this low, by the way, to watch for is 130.60. This high right here is 130.14. Oh, yeah, 130.14. So that means right now, this is really what we need to watch. Now, it's coming in, semiconductors are coming in higher, of course, with the rest of the market. But if we can't get through the highs here and this starts to roll over, it doesn't even have to be a picture perfect textbook island top. If it gaps back down, let's say tomorrow, that would not be a good situation. But if it chops around in here and then eventually sells off, this could be more of an indication that at least semiconductors are tired. We'll see about that. Seasonally, we're actually coming into a strong season for technology because of Christmas and holiday shopping, etc. But nonetheless, I would keep an eye on this. This is a very possible situation here where this is running out of steam. So I just wanted to show that and go back to the weekly chart. It's not nearly as clean. But if you look at the weekly chart, you don't see that gap. It's only on the daily chart that you see that. Here, it just looks like a gap that's been filled, and that's that.
Okay.
Now, if we move down here, this is biotech. Now, biotech has been extremely happy because biotech is where the specs go when they think the market is going up. So this is probably one of the more positive signs as well, because all of a sudden you had this tremendous move in biotechnology. Now, interesting about biotechnology, if I blow it up, that this actually peaked in 2015. We're talking about a high in biotechnology going back to 2015 at 133.60.
So 5 years of underperformance, they're trying to catch up in a week.
Exactly. So that's another one to keep an eye on. Now we're starting to come into some resistance up here around 122.50. That was the highs that we saw last year before we had the big crash in November, December.
Any
So it
cross
looks like it
currents,
wants.
Michelle? Any cross currents in December with tax selling and portfolio adjustments going into the end of the year? Any technical factors that could be playing into the rotations that we're getting here?
Well, as I said, I think the biggest rotation that we're seeing, as we've started to see a lot of money coming into biotechnology after years of it underperforming, definitely means that there is still a flow of bullish sentiment, and that in terms of the end of year, I mean that you can't really have a hard and fast rule anymore about end of year tax selling or anything like that. Everything has changed. The rules have changed. So I don't even look at the old rules anymore. You know, seasonally, we're supposed to be getting into a Santa rally here. Let's see if that happens. But also you have, like you say, tax selling. Low participation volume goes down. But then we also have FOMO, fear of missing out, and people going, wait a minute, last year we had this major sell-off in December. This year, I don't want to miss new highs. So anything goes. That's how I look at it.
Okay.
And then I think to me, this is going to be one of the biggest keys right here. This is the brick and mortar retail. You know, Amazon went down a lot, and so has a lot of the brick and mortar retail stores. Not all of them. Some of them have seen great action, but this in particular shows where the brick and mortar is. This is retail. And right here you can see that we're holding desperately onto the 50-week and trying to hold above the 200-week. And so essentially this high, which is the last swing high we had early November, which at 45.41, if it can get through that, then I think we can start to see a move up in retail. Now, do we need to have a move up in retail like we have, let's say, in NASDAQ or in semiconductors or in biotechnology? No. What we do need, though, is at least to see some level of that continuing consumer positive sentiment that has been credited for a lot of the move in the market. Is, you know, people going out and spending money. Record debt, of course, is another problem, but nobody seems to care about that either.
How about this, Michelle? What seems to be going on, you showed the semis, which have been leaders and on fire for a long time, that people are coming out of higher valuation stocks and looking for anything that's cheap and hasn't moved yet.
Well, you know, that's a very good question. And actually, if I can get into my market gauge site, we actually have a value versus growth ratio chart. So let me see if I can get in there and show you that, because that was a trend that was starting and then it switched off. And now it's possible that we could see that coming back again. So let's take a look here, tools.
Because even the trannies started acting better, and they've been underperforming for a long time. It's almost like rotation into underperformers and taking money off the table from the comets and shooting stars.
Right.
This is the way it kind
so
of
what do we
feels
have
to
here?
me.
This is just the regular old. Let's see if we can find risk gauge. I'm sorry, I have to log into the site. All right, let's see. So we want to see, well, first of all, let's take a look at the ratio on SPY versus utilities, because that's often an indication right here. So here's your utilities, and here's your SPY. These
You're
are
going to have to change your screen.
Right. Here's the ratio. So right now you can see that the SPY is actually starting to underperform the utilities a little bit. But I don't know if that necessarily means very much at this point. It's just something to look at. I want to find the one that you're looking for, which is the
value growth.
Growth versus. Oh, good.
And you'll probably
James,
have to.
James just walked in. Let me ask him. James, in which part of big view would be growth versus value ratio chart? He'd have to look at it too.
It's okay,
Michelle. Off the top of my head.
All right, why don't we, we'll save that for next time. I'm still seeing your original screen, so we'll just stay with this and You have an update for us on the commodity sector, which,
Yeah,
you know,
let's take
last
a look
time
at commodities. Let's
you
go.
were,
Let's go there.
you know, really turning positive on some of the different commodity markets, and you caught that big run in metals, and you start showing sugar and things
Oh,
like
let's
that.
look at sugar, because yeah, it's under. Yeah, it's all right. We moved on. Thank you. All right, let's look at sugar. Here's this is the continuous contract of sugar. I'm so glad you asked about this, because sugar, which has been underperforming and this year made new lows, is now, you can see, having this beautiful base.
Nice.
Here's the daily chart. Here's the weekly chart. So we haven't cleared that 50-week moving average. Here's the monthly chart, which means, you know, you can still see how well it's underperformed everything else. But if we just look at this, what we're seeing right now and right into the opening this morning is all of a sudden sugar starting to perk up a little bit. And why do I watch sugar? Because sugar is this interesting indicator, not only of, you know, just basically there was been some beet damage and stuff like that, so regular crop conditions, but it also is an interesting indicator of early signs of inflation potential. And this is historical. It started in 1974 when sugar shot up like tremendously, long before the oil and the metals did. Then in 79, 80, sugar shot up again, not as much as gold and silver did, but nonetheless it went along for the ride. And now, even though we've had moves in gold and silver and the miners, they're all basically in ranges at this point, sugar is starting to show signs of life again. So it is possible that regardless of what's going on in equities, this 100-year low ratio between commodities and equities is going to start to narrow. And that really still, I believe, is a good opportunity for 2020. Let's take a look at the agriculturals too.
Okay.
Now, this has also been all over the place, very, very sensitive to tariffs because China hasn't really been buying our agriculturals. So this is another good place, I think the most reliable place to look to see if there really is a trade deal or not. Because if there would be, then you would start to see DBA, the agricultural ETF that holds corn.
Do you see any erosion in DBA like you do on some ETFs that are, you know, like bearish ETFs on equities, or that doesn't really happen?
You
in
know what?
DBA?
I'm still having so much trouble hearing you. I heard
Okay.
I heard everything until erosion, then I didn't hear the rest.
Okay. That like certain ETFs have they're almost like options where they have a cost and they erode as time goes on. DBA is not like that, right?
No, but DBA costs a lot of money. Because it has such a low volatility and such a small range, this 0.11 indicates that it trades about 11 cents on average per day trading range.
Yeah.
It ties up a lot of money. So that's something that people need to be aware of. So you can look at some of the individual grain ETFs, but what's interesting, I want to point out, because let's look at it for information. Look what's happening here. Here's the 50-week moving average.
Right
if we
there.
scrunch this up right here.
Mm-hmm. Yeah.
This has not been above the 50-week moving average since 2018, basically early summer. So now here we are,
knocking at the door,
and bumping up against it, bumping up, bumping up, bumping up. If we can clear, if this gets through 1630 on a weekly close and holds, then that's another indication that food prices are going up. So add up sugar and add up food, and we can finally start to see, like I said, not only commodities playing a little bit of catch up, but what is going to happen, what would be the end result with equities. It could actually turn out to be a positive for equities initially, because initially it'll be seen as global demand increasing. But if that continues to rise and equities slow down at any point and commodities continue to go up, then we're talking about kind of what Steve was saying here, which would be a stagflation type of situation where the Fed would be forced to act. So that's really the bottom line, is if you're looking at the whole charts right now, we still have a party in equities. That would only change if we really started to see, say, looking at IWM, a breakdown below 157.75. And semiconductors we have very interest in because it could be topping out, whereas biotech could still go on a tear. Commodities wise, the metals, if we just take a look here at gold, we're just in this range.
Yeah.
If we take a look at GDX, it broke out over the 50-day moving
Yeah,
average.
the shares are
It's
acting better than the bullion for the first time in a long
yes,
time.
and that's also another when the miners start to outperform, that's usually bullish for the metals. But right now, this is coming in a little bit lower, as you can see, probably because of the good news that we had this morning with the jobless claims. And so let's see what happens at 27. But if this thing gets going and starts clearing all this work, look at all this work, that would be bullish. The same thing with silver. Silver was starting to outperform gold. Now it's actually turned down. And you can see, though, this too has really been holding on to its 200-week moving average. All of this is huge amount of sideways consolidation going back since 2012. So that's what I'm saying. To me, right now, these are frustrating. When people are buying strength, they wind up getting stopped out. But if this ever really gets up in momentum and the SLV can get through, say, 18, I think that's also. So we're looking at sugar, we're looking at agriculturals, and we're looking at the metals. It's great potential, but they're still.
And this was all happening before the dollar turned. So now
Right,
the dollar turning should give it impetus.
Absolutely. Absolutely. It's just because all of a sudden now it costs less money to buy into commodities.
Nominal growth from a weaker dollar. Great presentation again. Anything you wanted to wrap it with before you show us your website?
Let me think if there's anything in particular. Well, you know, in terms of opportunities here, like I said, I like to talk in broad strokes. As far as individual stocks, I will talk about one stock because I've been so watching it. I wouldn't buy it because I thought that it was going to have to make another new multi-month low, and it did that yesterday. So I would keep an eye on Beyond Meat, not for December, because seasonally, I can't imagine during the holiday season, people are going to run out and not make that turkey or ham and instead, you know, go out and buy
a tofu burger,
an alternative meat product.
Yeah.
But I think once people
Soylent Green, I hear.
I'm sorry?
Soylent Green.
Exactly. But
right.
I think what could happen is in January, this could actually start to turn around. So we're going to start looking for signs of this is a mega trend for 2020, that this now has made a new low. We want to look for some kind of reversal pattern. It may not happen for a while. If it does, then I would follow it. And the other great opportunity, I think, besides commodities for 2020 is still going to be the marijuana space. Okay. It's gotten so hammered. You know, these are, I guess we can call them value plays at this point. Yeah. This made a great low. This is MJ back in mid-November. Now it seems to be holding. Hard to see where it's coming in right now, but if it gets through, say, 1730 all the way up to about 1750, I think that could be another interesting opportunity with a very low risk to under where the historical low is right now at 1591.
Wow, man.
Why are you laughing?
No, I'm just, wow. Marijuana stocks, anyway.
Well, you know, I like to go with the mega trends.
Yeah, I was just, that's what we used to say in the dorm. Wow, man.
Wow,
anyway.
Oh, I see.
Okay,
oh, dude.
Okay, so the marijuana stocks, that's interesting. They really have caved in a long time. And start keeping an eye on the alternative meat source stocks and Beyond Meat.
Especially as we get into January. Yeah.
Okay. All right.
Yeah, and then of course, you know, everything I said about the Modern Family. Can IWM reach its all-time high, and would that be it? And if not, well, then that's probably it for the whole market. But right now, it's bullish. Everything looks good.
Okay, so you could follow Michelle on Twitter at Market Minute. Do you want to show your website? Can you do that?
Let's see what happened to it.
And you were talking about one thing I know about you, Michelle. You said, you know, all the old rules, I've thrown them out. I know that is in concern relating to markets. I know one rule that you haven't thrown out, the one we were taught, the golden rule. And that's why I feel comfortable about, you know, people saying, for me to say, people check Michelle out because it's due on to others. And thank you very much for being here. And are you able to pull up your website?
Okay, well, I have it up, but I guess it's not
Okay.
being shared on the screen, which is interesting.
Okay, and the
Wait a
website
minute.
name again is?
Market gauge, hold on. I
Okay.
figured out a way to do
Oh
it.
yeah, you have to stop sharing first and
And then, right, then I have
then show the screen.
share, and then I can show the screen here, share, and blow this up. How's that? You see it?
Good, got it.
Okay, there's my website, Market Gauge. There's me. There's my book, Plant Your Money Tree. And we have lots of great free analysis on here. This is Keith does, oh, that's my daily. Keith does a weekly outlook with a video. And Jeff just yesterday put out a new trades and tutorials, the end of bulls run in semiconductors ? So that's
Okay.
our free content. And we have some really excellent tools as well for you guys to take a look at in Market Beat. Besides our commentary, you can take a look at Big View and some of the indicators I was showing you before right here where it says Big View. So have a look, and if you have any questions, get in touch with me on Twitter or through email, or anyway, actually, I'm pretty easy to find.
Happy Hanukkah, Michelle. I hope that all the things we talked about are like the candles on the menorah and light up your bank account.
Oh, thank you very much. Same to you. Have a very happy holiday, and I look forward to talking to you again in 2020.
It's a promise. Michelle Snyder at Market Minute and at Market Gauge is her website. Thanks so much, Michelle.
All
I
right.
appreciate you coming in and clarifying some things and updating your views. Always edifying.
Great. Thank you, Dale. You take care of yourself.
All right. That's it, everyone. And we'll see you for the NFP tomorrow and wrap up the week. Remember, don't just count your pips, count your blessings, and be one for others. And that's a wrap for me. Adios.